Hello everybody. Today we are going to study IFRS 16 leases. Okay. What are leases? Lease is an agreement or a contract between two parties. One party gives the right to use an asset to another party in exchange for consideration. Okay. So it's a contractual agreement. Now these are the definitions given as per the IFRS 16. So the lease is a contract that conveys the right to use an underlying asset for a period of time in exchange for consideration. Now who is the party who is giving the right to the other party? This party is known as the lessor. So the lessor is an entity that provides the right to use the underlying asset in exchange for consideration. And the party who gets the right to use is known as the lessee, and this party gives consideration for the use of asset. The right of use of asset represents the lessee's right to use the underlying asset. So the three things that you need to know about a lease is that there is a lessor who is giving the right to use an asset to the lessee in exchange for consideration, and the underlying asset, the right to use the underlying asset, is passed on to the lessee. Okay, so now how do you account for it? Now here we are going to study the accounting treatment in the books of the lessee, that is the person who is getting the right to use the asset. So here two items would be recognized. One is the right to use the asset, which would be recognized as an asset in the SOFP, and as I said earlier, this right to use an asset is in exchange of some consideration. So the consideration is payment to be made to the lessor. So this is recognized as a lease liability. So lease liability represents the obligation to make the lease payment, that is the consideration that the lessee has to pay in exchange for the right to use the asset. This is how you recognize. You recognize one asset, which is the right to use asset, and second is the lease liability. Now how do you measure it? So the initial measurement will include, for lease liability, it will include the present value of all the future payments that need to be made related to the lease. It may include the fixed payments that you need to make, the rentals that you need to make. If there is any termination penalty, it would include that. It would also include, if at all, the lessee gets a right to buy the asset at the end of the lease period, then the value of this would also be a part of the lease liability. Okay, so basically lease liability is the present value of all the future cash flows or present value of all the future payments that needs to be made. So the lessee will recognize the lease liability at present value. The right of asset, right of use of asset, it will include the lease liability plus any initial payment made to the lessor and any direct costs that are incurred related to this lease, and if at all there is any dismantling cost or asset removal cost that would be incurred at the end of the lease period, this would also be a part or the cost of right of use asset. Okay, so this is how you will do the initial measurement. What happens next? The subsequent measurement. As I said earlier, generally the asset is recognized at cost, and then this asset will be depreciated over the lease period. Okay, now there are two things. It may happen that the lease period is shorter than the economic useful life of the asset. So the points to be considered here for calculation of depreciation is that you would compare the lease term with the economic useful life of the asset That is first consideration. And the second consideration is you have to ask, is the asset going to be transferred to the lessee at the end of the lease term? Okay, lease term is the period of the lease. Now, if the ownership is going to be transferred to the lessee at the end of the lease term, then the depreciation would be charged over the economic useful life of the asset. Okay, just remember, if the asset is going to be transferred to the lessee at the end of the lease term, then the depreciation would be charged over the economic useful life of the asset. This is very logical because the ownership is transferred to the lessee, so he will continue to use it over the economic useful life, and therefore the asset would be depreciated over the economic useful life. We had already said that in calculating the initial value of the asset, we would take into consideration if the purchase price is there, part of the lease. Okay, so all that would be measured in the initial measurement of right of use asset. Now, if the ownership is not going to be transferred at the end of the lease period, then you would compare the economic life with the lease period, and you will depreciate it over a period which is shorter. I repeat, if the ownership does not get transferred to the lessee at the end of the lease, the depreciation would be over either the economic life of the asset or the lease term, whichever is shorter, whichever is less. Okay. Now, let's do a small example. This example will help you to understand the journal entries as well. Okay. Now, on 1st January 2012, XY entered into a lease agreement to lease a machine for 4 years. The lease rentals payable are 50,000 payable annually in arrears. Okay. Arrears means the lease liability or the rental would be paid at the end of the year. Like in this case, the lease was entered on 1st January 2012. So the lease rental would be payable on 31st December 2012. So after 1 year, that is known as payable in arrears. The initial cost of $10,000 was incurred by X and Y. Prepare an abstract of the financial statement for the year ended 31st December 2012. The present value of the lease rentals is 1,65,600 and the interest is implicit interest of 8%. Now you have to remember, you need to make a table like this. Okay, first it will have the year. So it was purchased in the year the lease was entered in the year 2012. The lease, let's calculate first. Okay, on 1st January you will recognize 1st Jan 2012 you will recognize a lease liability. Now, as I said, lease liability is the present value of all the payments that needs to be made. In this case, they have already given you the present value of the lease rentals. There are no other payments except for the lease rentals, and the value is given to you as 1,65,600. So on 1st January 2012, you will recognize a lease liability of 1,65,600 and you will recognize a right to use asset which will be equal to the lease liability plus any additional expenses that are incurred. So in this case, the additional expense is 10,000. So we will add 1,65,600 plus 10,000. So you will recognize an asset of 1,75,600, right? Now we need to prepare the abstract of SOPL and SOFP as on 31st December 2012. So before we do this, we need to fill up this table. Now remember, this is lease payments in arrears, which are paid in arrears. So the first year is 2012. When you started this year, you had a lease liability of 165,600, correct? Now the interest that will be accrued on this at 8% is calculated, and we get an amount of 13,248, right? This will be, I'll write here so it will be clear, at 8%, right? And after accruing the interest, you are going to make an installment payment of 50,000. Installment payment is nothing but the lease rental, correct? So you will have an opening balance, you will add interest to it, and you will subtract the amount that you will be paying. So you will have a closing balance of 1,28,848, right? So the closing balance of 2012 will become the opening balance of 2013, right? So I'll carry forward the balance of 1,28,848. So at the end of the year, again 8% interest will accrue on it, which would be $10,308, right? So I will add that, and I will also make a payment of 50,000, so that at the end of the second year, I will have a closing balance of $89,156. Okay, you can go on doing this for 4 years, and at the closing balance of the 4th year would be 0, because your lease liability will be over by then. Okay, now you will understand why we require to make this table. Now in SOPL, the first entry that you will do is depreciate an asset. Whenever there is a non-current asset, there will be depreciation, right? So depreciation will be charged on 1,75,600 divided by 4 years, because the lease term is 4 years. So 1,75,600 divided by 4, you will get a depreciation of $43,900. Second, you will charge a finance cost. This finance cost is nothing but the interest accrued for that year. So for 2012, the interest accrued is 13,248. These are the two entries that would be there in SOPL. Next, we will make an abstract for SOFP. Now, on the asset side, we will have right to use the asset, which will be, the cost is 1,75,600 minus accumulated depreciation of 43,900. So you will have a carrying amount of, just a moment, 1,75,600 minus 43,900. So you will get an amount of 1,31,700, right? Now you will have to record the liability. Now your liability at the end of the first year is 1,28,848. The liability at the end of the second year is 89,156, right? What does this indicate? At the start of the year, you had a liability of 1,28,848, and at the end of the year, you had 89,156, right? So the liability is split into two parts. One is the non-current liability, which is equal to the closing balance of the subsequent year, which is 2013 in this case. Okay, because it will take more than 12 months to pay this liability, the balance will be non-current liability of 89,156. And you will recognize a current liability which is equal to the difference between the balances of 2 years. So in this case, it is the difference between 1,28,848 minus 89,156. So the current liability in this case would be 39,692. I hope you have understood this. This is a very important part. So depending upon which year they have asked, you will need to prepare a table and do the workings for those many years. Okay. Now this is the calculation for lease payments in arrears. It may have, now going back to the journal entry here, you will see you are incurring a finance cost of 13,248. What are you doing with this 13,248? You are adding it to your lease liability. So the journal entry would be debit finance cost, which will be shown in SOPL, and credit lease liability. I hope that is clear. And when you make the payment, cash payment of 50,000, the entry would be your lease liability is decreasing. So debit lease liability and credit cash. Okay. I hope this is clear. Now let's do an example with lease payment in advance. In the previous sum, we had paid the lease rental at the end of the year. In this case, when you make the payment in advance, that means you are making the payment at the start of the year. So there is one just additional column and some interchanging of the column, but the table will need to be prepared. Let's read the question. On 1st January 2012, XY entered into a lease agreement to lease the machine for 4 years. The lease rentals payable are 50,000 paid annually in advance. The initial cost of 10,000 was incurred and paid immediately. Prepare an abstract of the financial statement for the year ended 31st December 2012. Now here the present value of the lease rentals are given to you. This will also include the first lease rental which you are going to pay on 1st January itself. Why are you going to pay it on 1st January 2012? Because the lease payments are to be paid in advance. Okay. So let's prepare this table. Start of the year 2012, you have an opening balance of 1,78,850. Immediately you're going to make a payment of 50,000. So you will have at the end of the year, the balance is going to be 1,28,850. So you will calculate the interest on 1,28,850 at 8%, which is 10,308. Okay, and you will add it and you will get a closing balance of 1,39,158. So the closing of 2012 will be the opening of 2013, which is 1,39,158. You will have to make a payment in January itself for 50,000 and the total would be 89,158. Right? You will add interest, which is 7,133. And you will have a closing balance of 96,291. Okay. Now here there's going to be a slight difference. Okay. Your lease liability is going to be 1,78,850 minus 50,000 because you are going to make a payment of 50,000 immediately. So you will recognize an amount of 1,28,850 as your lease liability. Then asset would be recognized as Asset includes the lease liability plus all the payments that are made. So here it would be 1,28,850, which is the lease liability, plus the 50,000 installment that you have paid, plus 10,000 direct expenses that you have incurred, and the amount would be 1,88,850. This would be the asset. Now the abstracts of SOPL. Let's first calculate the depreciation. So the depreciation would be calculated over 4 years, which will be equal to 1,88,850 divided by 4. So you will get $47,203, right? This would be the depreciation. Finance cost can be picked up from the table for the first year, which is 10,308. This is for your SOPL. For SOFP, you will recognize an asset at cost less accumulated depreciation. So the asset would be recognized as your initial cost was 1,88,850 minus depreciation 47,203. So you will get a carrying amount of 1,41,638. Sorry, $37. Right? This would be the asset. Then liability. Now in this case, the current liability, here you will not use the same equation where the difference between the closing balance of the two periods. Here it is clearly seen that payment of 50,000 is due immediately after the closure of the first year, right? So your current liability will be equal to the payment that would be made immediately, and your non-current liability would be the difference between 1,39,158 minus 50,000. So you will get 89,158. This would be your non-current liability. With practice, I'm sure you'll be able to master this. This might take some time for you to understand. I would suggest that you go through this example step by step so that you will understand this. Now let's go to the next example here, which relates to how to identify the period over which you're going to depreciate the asset. Okay. Now, in this case, ABC Limited leases an asset with a useful life of 6 years. So the, not the useful life, leases an asset for a lease period of 6 years, right? The economic useful life of the asset is estimated to be 7 years. The present value of the lease payment is $56,000. The entity also enters into an optional secondary period of the lease of 2 years at the very nominal rent payable in arrears. What will be the carrying amount of the right of use asset in ABC Limited in SOFP at the end of the 3-year lease period? Okay. So here you need to understand two things. Your primary lease is for 6 years and your secondary lease is for 2 years. And when they say that the secondary lease period is for a very nominal rent, that gives you an indication that it is reasonably certain that the lease would be extended to the secondary phase as well. So here the total lease period would be calculated as 6 years plus 2 years. That is, total lease period is 8 years. What is the useful life of the asset? The useful life is only 7 years. Now, as I had said earlier, whenever the ownership does not transfer, you will depreciate the asset on the period whichever is shorter. So the lease period is 8 years and the useful life is 7 years. So the asset would be depreciated over 7 years. Asset would be depreciated over 7 years, as 7 years is shorter than the lease period, right? So depreciation will be equal to 56,000 divided by 7, which will get you 8,000 per annum. Now they have asked us the carrying amount at the end of 3 years. So accumulated depreciation for 3 years would be 3 into 8,000, which is 24,000. Therefore, carrying amount would be cost minus accumulated depreciation. Cost here is 56,000. Accumulated depreciation is 24,000, and you will get a carrying amount of 32,000. I hope that is clear. Thank you so much.